Hello and welcome to today's podcast, where we're diving into the essential bank monitoring practices you'll need to know for 2025. In a world where cyber threats are becoming more sophisticated, keeping an eye on your bank accounts for any unauthorized activity is more crucial than ever. Just last year, consumers in the U.S. lost over $12.5 billion to scams, marking a staggering 25% increase from the year before. And that's just the reported numbers. Experts suggest the actual figures could be much higher when considering unreported cases. I've spent a significant amount of time exploring various solutions, trying out different tools and strategies across multiple banking institutions. My goal is to offer you a clear pathway through this complex landscape, sparing you the exhaustive trial and error journey that I've had with clients, ranging from small business owners to high net worth individuals. Let's start by understanding the financial monitoring landscape, which has been changing rapidly. With the rise of real-time payment systems like Zelle and Venmo, which processed over $490 billion in transactions last year alone, there's a new layer of vulnerability that traditional monitoring wasn't designed to handle. So it's essential to know how different strategies adapt to these modern payment systems to ensure comprehensive financial protection. When it comes to monitoring your bank accounts, three main approaches stand out: bank notifications, third-party financial management apps, and manual reviews. Each of these offers a unique blend of automation, convenience, and control. And as technology evolves, especially with AI enhancing fraud detection and open banking expanding third-party app capabilities, these approaches have adapted in distinct ways. Why did I choose these three? Well, after analyzing over 15 different methods, these consistently emerged as the most practical and effective for the average consumer. They also represent different philosophies of financial security, whether it's institutional trust with bank notifications, technological integration through third-party apps, or personal control via manual reviews. Let's break these down a bit further. Starting with ease of use, bank notifications came out on top in my tests across major banks like Chase, Bank of America, Wells Fargo, and digital newcomers like Ally and Capital One 360. They require minimal setup and provide real-time alerts within seconds of a transaction. The challenge, though, is avoiding alert fatigue, where you get overwhelmed by notifications for every minor transaction. The key here is customization, using the granular controls most banks now offer to set thresholds, create exceptions, and establish time-based rules to make alerts work effectively for you. Now, if we look at comprehensiveness, third-party apps like Mint, YNAB, Personal Capital, and newer ones like Tiller and Pocket Guard offer a sweeping view of your finances. They pull data from multiple accounts into one dashboard, which is a growing trend. In fact, the global market for personal finance apps was valued at over $105 billion last year and is projected to reach $158 billion by 2026. However, these apps come with privacy concerns, especially given recent data breaches. But their comprehensiveness includes spending categorization, trend analysis, and predictive insights that can spotlight unusual patterns. Moving on to accuracy, manual reviews are unparalleled. They allow you to scrutinize transactions to the penny while applying your personal understanding, something automated systems often miss. The downside is the time commitment, especially with the volume of financial activities increasing. Still, manual reviews offer a unique perspective, like noticing a series of small, seemingly normal transactions that together indicate something's off. On the security front, bank notifications are deeply integrated with your financial institution, benefiting from regulatory protections and advanced security measures like multi-factor authentication and encryption. While third-party apps are generally secure with bank-level encryption, they do expand your digital footprint, necessitating a trade-off between convenience and security. Many apps now use API connections instead of older methods for accessing account data, making them more secure. Lastly, let's talk about cost effectiveness. Bank notifications are typically free, coming as part of your banking services. Third-party apps, however, range from free to premium subscriptions that can cost anywhere from $50 to $200 annually. Manual reviews only cost your time. But if you consider the opportunity cost of spending hours on analysis, it can become the most expensive option for high transaction accounts. Let's look at real-world scenarios. If you need immediate alerts, say for a suspicious ATM withdrawal or an unexpected online purchase, bank notifications are unbeatable. I've seen clients receive alerts within 30 seconds of a fraudulent transaction, allowing them to act quickly. This speed is crucial, especially for debit card fraud, where protections are more limited. For those managing multiple accounts and wanting a consolidated financial overview, third-party apps are perfect. They bring your checking, savings, investments, and more into a single view, helping you manage everything efficiently. But remember, always weigh the convenience against the potential privacy trade-offs. And for those who want ultimate precision, manual reviews are the way to go. They're best for those who like to keep a tight grip on their finances, even if it means dedicating more time to reviewing transactions. So, as you navigate these options, consider what suits your needs best. Whether it's the speed and security of bank notifications, the breadth and integration of third-party apps, or the precision of manual reviews. Each approach has its strengths. As we step into 2025, staying informed and proactive about your financial monitoring is not just wise, it's essential. Thanks for tuning in, and I hope this helps you make smarter decisions about protecting your finances.